Are you watching your portfolio bleed while wondering what you're doing wrong? Do you feel like the market is rigged against ordinary people like you? There are two types of investors in America today. The first type, they chase the latest hot stocks. They buy crypto at the peak. They follow Reddit tips and TikTok gurus. They think this time is different. The second type, they watch the shadows. They read the signs. They understand that the greatest fortunes are made when others lose everything. Here's the shocking truth that Wall Street doesn't want you to know. While retail investors pour their life savings into overpriced stocks, while financial advisors tell you to stay the course, the world's greatest investor just made the most defensive move in history. Warren Buffett is sitting on $360 billion in cash. That's 60% of his entire portfolio. The highest percentage ever, not 10%, not 20%, 60%. Today I'm going to reveal what Buffett sees that you don't. Why is the Oracle of Omaha preparing for something massive, and how you can position yourself before it's too late. If you're ready to stop being sheep in a market designed to fleece you, comment Cash King below, because what's coming will separate the prepared from the panic-stricken. Let's start with what $360 billion really means. Number 1. The unprecedented hoard. You trust the experts. Buy and hold, they say. Don't time the market, they preach. Stocks only go up, they promise. Meanwhile, the smartest money in history is running for the exits. Warren Buffett didn't become worth $150 billion by following conventional wisdom. He became rich by doing the opposite of everyone else. When others buy, he sells. When others panic, he buys. For over 60 years, Buffett has never held more than 30% cash, even during the 2008 financial crisis, even during the dot-com crash, even during Black Monday 1987. But today, he's holding 60%. That's $360 billion sitting in treasury bills, earning a measly 4% while stocks soar to record highs. The financial media calls him out of touch. Young investors mock him as outdated. But here's what they don't understand. In 1999, during the dot-com bubble, tech stocks were guaranteed winners. Buffett refused to buy them. Critics called him a dinosaur. He doesn't understand technology, they laughed. 18 months later, the Nasdaq crashed 78%. Those guaranteed winners became guaranteed losers. Buffett's boring old stocks, they kept making money. In 2007, real estate was the safest investment ever. They're not making any more land, experts declared. Buffett sat on cash. Again, they called him foolish. 12 months later, the housing market collapsed. Buffett used his cash pile to buy an entire railroad and Bank of America preferred shares and dozens of other bargains. The deeper truth Buffett discovered: cash isn't trash when everything else is overpriced. Buffett understands what Wall Street forgot. Patience is the ultimate competitive advantage. Cash gives you options when others have none. Cash lets you buy when blood runs in the streets. Cash transforms disasters into dynasties, but this cash hoard isn't just about opportunity. Number 2, the market's hidden disease. You see record stock prices and think everything is fine. The Dow hits new highs, the S&P keeps climbing. Your 401k looks healthy, but beneath the surface, something is rotting. Buffett sees what most people miss. He doesn't look at stock prices, he looks at stock values, and what he sees terrifies him. Companies trading at 30 times earnings when they should trade at 15. Tech stocks are worth more than the entire country's GDP. Businesses with no profits are valued at billions. What is the average price-to-earnings ratio of the S&P 500? Over 25. Historical average? 16. That means stocks are 56% overpriced. Not a little expensive, dangerously expensive. In ancient Chinese medicine, doctors could diagnose illness before symptoms appeared. They read subtle signs invisible to others. A slight change in pulse, a barely noticeable shift in skin color. Buffett practices financial medicine. He diagnosed the current market's disease years ago. The symptoms? Euphoria. Speculation. Easy money. The disease? Bubble mentality. Remember the story of the Chinese merchant Li during the Opium Wars? While other traders chased quick profits from risky ventures, Li quietly sold his inventory and hoarded silver. His friends mocked him. "Lee, you're missing the greatest boom in history. Everyone is getting rich except you." When the bubble burst and war devastated trade, Lee's friends lost everything: their shops, their fortunes, their futures. But Lai? He used his silver to buy entire districts for pennies. Lai discovered that the greatest opportunities come disguised as disasters. Buffett learned the same lesson. When everyone feels rich, someone is about to become poor. The market's hidden disease is spreading. Margin debt is at record highs. Retail investors are borrowing to buy stocks. FOMO is driving prices beyond reason. But smart money knows the cure. Number 3. The coming great transfer. You believe this time is different. Technology has changed everything. AI will save us. The Fed won't let markets crash. History laughs at such confidence. Every generation thinks it's discovered the secret to permanent prosperity. Every generation learns the same painful lesson. Gravity always wins. Buffett isn't just hoarding cash for fun, he's positioning for the greatest wealth transfer in modern history. From the unprepared to the prepared, from the emotional to the rational. Economic cycles are like ocean tides. They come in, they go out. Always have, always will. When the tide goes out, Buffett says you discover who's been swimming naked. And right now, almost everyone is skinny dipping. Consider the wisdom of the ancient Chinese strategist Sun Tzu. In the midst of chaos, there's also opportunity. Buffett studies chaos like a general studies battlefields. Not to create destruction, to profit from it. During the 2008 crisis, while banks collapsed and retirement accounts evaporated, Buffett spent $44 billion in just 6 months. Goldman Sachs, Bank of America, General Electric, all at fire sale prices. Those investments returned over $20 billion in profits. While others lost their life savings, Buffett made a fortune. Not because he caused the crisis, because he was ready for it. The coming transfer won't be random, it will be systematic. Wealth will flow from those who chase returns to those who preserve capital, from those who panic to those who prepare. Buffett's $360 billion isn't just money, it's ammunition, waiting for the right targets. When fear replaces greed, when forced selling begins, when diamond hands become paper hands, that's when Buffett strikes. The deeper truth about wealth transfers: they're not accidents, they're cycles, and the biggest cycle in modern history is about to complete. But preparation requires more than just cash. Number 4, the 3 shield strategy. You put all your money in one place: your 401k, your brokerage account, your savings. When disaster strikes, you lose everything at once. Buffett learned from ancient Chinese military strategy. Never concentrate forces in one location. Never depend on one weapon. Never fight with only one plan. Smart generals use 3 shields. Shield 1, liquid defense. Cash, treasury bills, money market funds. Boring? Yes. Safe? Absolutely. Shield 2, value fortress. Companies are so cheap that even a crash can't kill them. Businesses with real profits, real assets, and real dividends. The kind of stocks selling for less than their cash on hand. Shield 3, opportunity reserve. Extra cash is waiting for panic moments. When everyone sells, you buy. When blood runs in the streets, you dance. In 1974, during the worst bear market since the Depression, a Chinese-American investor named Gerald Tsai watched his peers lose fortunes. Tech stocks crashed 80%. Growth stocks became ghost stocks. Panic selling everywhere. While others panicked, Tsai deployed his 3 shields. His liquid defense protected him from forced selling. His value fortress held steady while growth stocks collapsed. His opportunity reserve let him buy world-class companies for nothing. IBM at $150, Tsai bought at $60. Coca-Cola at $80, Tsai bought at $35. Disney at $120, Tsai bought at $25. 5 years later, when markets recovered, Tsai's 3 shield strategy had tripled his wealth. His panic-selling friends were still broke. Tsai discovered that protection creates profits. Buffett uses the same strategy. His liquid defense, $360 billion in cash and treasuries. His value fortress, Berkshire's operating businesses. His opportunity reserve, waiting for the next crash. The 3 shields teach us, Defense wins championships. In bull markets, offense gets the glory. In bear markets, defense gets the money, and we're heading into bear market territory. But there's one final lesson. Number 5, the patient predator. You want instant gratification, quick profits, fast gains. You check your portfolio 10 times a day. Every red day feels like a disaster. Buffett thinks in decades, not days. He calls himself a patient predator, waiting, watching, circling, until the perfect moment to strike. Most predators hunt when hungry. Smart predators hunt when prey is vulnerable. The difference determines who eats and who starves. Buffett learned this from studying the great Chinese investor Li Ka-shing. During Hong Kong's darkest hours in the 1960s, while riots destroyed businesses and fear paralyzed investors, Li quietly bought real estate for pennies. Other investors called him crazy. Hong Kong is finished. Get out while you can. You'll lose everything. Li ignored them. He saw past the chaos to the opportunity. Hong Kong would recover, and when it did, land would be precious. Li became Asia's richest man, not by being lucky, by being patient. The patient predator principle. Great fortunes require great timing. Buffett's $360 billion isn't sleeping money, it's hunting money, stalking the next great opportunity. When markets crash 30%, when blue chip stocks trade for half their value, when fear reaches maximum intensity, that's when the patient predator becomes the aggressive buyer. But patience isn't passive. Patience is preparation. While others check prices, Buffett studies businesses. While others follow trends, Buffett follows fundamentals. While others panic, Buffett plans. The ancient Chinese understood this wisdom. The best time to plant a tree was 20 years ago. The second best time is now. Buffett planted his money tree 60 years ago. Now he's preparing to plant a forest. Because the greatest fortunes aren't built during good times. They're built during terrible times by patient predators. With $360 billion in ammunition, the question isn't whether a crash is coming. The question is, will you be ready? Now you understand why Buffett is hoarding $360 billion. It's not fear, it's preparation. He sees what Wall Street refuses to acknowledge. Markets are dangerously overpriced. A correction is inevitable, and the prepared will profit while others perish. If this ancient wisdom resonates with your soul, make this commitment today. Build your own cash shield before the storm arrives. Don't wait for the crash to start saving. Don't wait for panic to start planning. Start now. Start today. Comment Cash Shield if you're ready to think like Buffett instead of gambling like everyone else. Share this with someone drowning in overpriced stocks. You might save their financial future. And tell me in the comments, what percentage of your portfolio is in cash right now? Remember this eternal truth from the greatest investor alive. Be fearful when others are greedy, and greedy when others are fearful. The crowd is greedy. Buffett is fearful, and $360 billion doesn't lie. The patient predators are positioning, the cash hoarders are preparing, the smart money is moving. The only question left, which side of the coming wealth transfer will you be on? Choose like Buffett. Think like a predator. Build like your future depends on it. Because it does.